Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our weekly commentary on financial markets and the economy. Let's get started. This week's topic can be uncomfortably political because the minimum wage draws out strong opinions from people on both the left and the right. But in light of the fact that the Biden administration is pushing hard for an increase in the minimum wage to $15 an hour, and the fact that a minimum wage increase has strong support from both Democrats and Republicans, about 66% of Republicans are in support of an increase in the minimum wage, we could very well see a minimum wage hike sometime in 2021. Not as a part of the initial Biden stimulus package, because that's got to go through reconciliation. The reconciliation process is only good for things that have to do with the U.S. budget, so spending and taxes. So minimum wage won't be a part of that. But if 66% of Republicans out there in the hinterlands are supporting a minimum wage hike, this will not be a topic that just dies and goes away. It's going to be introduced as separate legislation, and we need to understand what that could potentially mean. And unfortunately, understanding the real economic impacts of a minimum wage hike tends to be distorted by extreme views on both sides. So, if you read the New York Times, if you watch MSNBC, an increase in the minimum wage is an unmitigated good. Because when workers have more money, they spend more money, and that means employers have more money to pay more money, and it's sort of kind of like this endless perpetual motion machine of swapping around money and make everybody better. But they can't really believe that completely. Because if they did, why are they talking about a $15 minimum wage? Why not 50? Why not 150? Clearly there's a recognition that there's some limit, that if you go above that, then instead of making workers better off, you cause them to lose their job. All right? But on the other side, it's not a good truth and light kind of message either. Because if you read the Wall Street Journal or Fox News, if we raise the minimum wage 1 penny, then every Walmart and McDonald's employee in the country is going to be fired. Unemployment's going to go to 1,000%, even though that's mathematically impossible, and the economy is going to completely derail. Which also seems a little off kilter in light of the fact that major employers like Best Buy and Amazon have raised their minimum wage to $15. Since the minimum wage was last increased 11 years ago, prices are up 25% and the stock market's up 400%. So is it really the case that there's no room to increase the minimum wage? That seems a little extreme. So our purpose here is to try and understand what are the implications of an increase in the minimum wage and what is a likely level for the minimum wage that if we see it increase into some zone like that, then we can think, you know what, the net benefit to the economy is going to be far more than the cost. And if it goes above that number, then we might worry a little bit more. All right. And in doing so, we want to strip out the political spin. We want to strip out the extreme views from both sides. And in the process, undoubtedly, people on the left at some points during this talk are going to get a little mad at me. And at some points, people on the right, you're probably going to get a little mad at me too. But hopefully we're going to find the true path that's somewhere in the middle. Now, in order to find that true path in the middle, unfortunately, we're going to knock down and hopefully demolish one of the great myths of the American history. And that is the myth of Henry Ford and his $5 a day wage. Now, it's not a myth that Ford did take wages at his factory from $2 a day to $5 in one fell swoop and just dramatically lifted the entire American middle class higher by that dramatic increase in wages. That's not the myth. That really did happen, and it changed America forever. But what is a myth is that his motivation for doing so was he said, you know, if I pay these guys $5 an hour, they'll buy my Model T. When they buy my Model T, they'll give me the money that I can then pay them in their $5 wages, and then we'll just swap money back and forth and everybody gets rich. That's not how companies work. It's not how the economies work, and it's nonsense. But that's the myth that gets told over and over again. So if the notion that he paid him $5 a day so that they could give him back, so that they could give it back to him by buying Model Ts, if that's a myth, what's the reality under that story? The reality under that story is that Ford hired legions of mathematicians that looked at everything going on his factory floor, always looking for ways that he could cut costs and sell his Model T for cheaper and yet make more money. And those mathematicians came to him and said, you know what? People really, really hate working on an assembly line.
Here she comes. Fine, you're doing splendidly. Speed it up a little.
And they quit all the time. And one of the most expensive things going on in your factories is people quitting, because we spend a lot of money to hire them, we spend a lot of money to train them, and then just as soon as they start getting good at their job on the assembly line, they quit, and we got to start the whole process over again. And what we figured out is that if we could pay workers enough that they stopped quitting, we would save so much money on hiring, we would save so much money on training, and most importantly of all, we would save so much money on a slow assembly line, because our assembly line is much slower than it could be because we got all these new workers in there that just don't know what they're doing. If a year from now every worker on that assembly line was good at their job, the assembly line would move faster, costs would plummet. You could actually afford to triple the pay of your workers from $2 to $6 a day, and you would make more money. That is the reality underneath the $5 a day. Because the mathematicians told Ford he could afford to pay $6, or I don't know what the exact number was, but somewhere in that neighborhood. And he said, interesting concept. I tell you what, if you say I can afford to pay $6, let's pay him $5 and see what happens. And the rest is history. So, the point is that there is not just a cost to increasing the minimum wage. There is by really understanding the reality underneath the Ford $5 a day, it kind of blows up the view of the left and the right. Because the left says it's a perpetual motion machine. You increase minimum wages, everybody's better off. No, actually there's a limit. If Ford had tried to make the wage $7 a day, Ford would have gone bankrupt and we wouldn't be talking about him anymore. You know, there's a limit to how much he could increase wages and still be able to afford to pay those workers. But it also blows up the myth on the right that increasing the minimum wage is a total negative for workers, a total negative for employers, and it just increases costs and everything. No, actually, to the extent that workers are happier, quit less, you're able to get the benefit of their training, you get higher productivity, there's a lift to employers as well. If you think that Amazon raised their minimum wage to $15 an hour out of the kindness of Jeff Bezos' heart, I'm going to suggest the motivation was not that. It was that he made more money because worker turnover fell, costs fell, productivity improved. So, the question that we need to ask ourselves is, what is that level of minimum wage that if Congress raises to that, then the economy's net better off? And if they raise it too much above that, then you start seeing layoffs. Then you start seeing people losing their jobs. And that's a complicated number because it's not the same everywhere. So right now, I would say that $15 an hour in Nashville or Seattle or San Francisco or Austin, these hot labor markets, would have no impact whatsoever. Because McDonald's, to attract workers, is probably already having to pay something like that. But Johnson City, Tennessee, Fresno, California, Oxnard, Mississippi, probably not paying $15 an hour. So it's different in different parts of the country. That's one complication. The other complication is one thing I am fairly certain of, is that the people who have no idea what that number is are the people in Congress who will actually set that number. They don't have teams of mathematicians like Ford did calculating how much productivity improves and training costs fall and blah, 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 so that we can afford to lift the wage to this level and things will get better for everybody, both the employer and the employee. Nobody in Congress is doing that work. You know who is, though? Walmart. And interestingly enough, today, Walmart announced that they were going to increase the average pay for their workers across the country to $15 an hour. So does that make $15 an hour, by some coincidence, this magic number? No, because they said their average worker would go from $14 to $15. So they're going to raise wages across the country. But their minimum wage is $11. And that's really important to understand. Amazon, Best Buy, their minimum wage is $15, but there is not an Amazon distribution facility in small town America. There is a Walmart. So the Best Buy, the Target, the Amazon minimum wage is biased by the fact that they're in the bigger cities where wages are already higher. Walmart, by contrast, is in all the small towns all across America. And they're saying, just like Ford said, I can afford to pay $5, they're saying we can afford to pay $11. So a minimum wage going from $7.25 to $11, the Walmart mathematicians say that works. That makes everybody better off. And my guess is, and it's only a guess, but my guess is that just like Henry Ford said, so I can afford to pay $6, let's make it $5. I suspect that the mathematicians at Walmart said, we can afford to pay $13, let's pay $11, or something along those lines. So if they make it a little bit more than $11, I think it'll be okay. I think the economy net will be will net benefit from a minimum wage increase to something in that zone. And how much can the minimum wage increase 5 years out, 10 years out? I suspect if we look at that minimum wage for Walmart, with all their brilliant mathematicians and their computer scientists who are continually calculating what will we save when we increase pay, then I think that'll be a pretty good benchmark for what Congress should be doing for the rest of the country. Thanks for joining us for Market Insights. We hope you found it informative. If you'd like to check out our other research, you can subscribe at the link below, or you can go to our website, caravelconcepts.com. Thanks.